Where? Who's sending chart?
In the Zoom chat. Look in the Zoom chat and scroll up a little bit.
Oh, yeah, look, it looks good. Probably range around here, right? It's your range. Probably this wick to this wick is probably your range. But either way, that's exactly what you're looking for. Entries up here. You want the entries to be above. Like this is perfect. You don't want any trades in here. You want trades here. The only time you can have trades in here is if you now, right? If you now get a bullish closure and then you create range two. You create a resistance, which will force you to move up from a support, which is good. When you create a range two within a range two, it increases the probability of your trade working out as you break up here, because now you've attempted to come down, you've failed, and typically that will result in a drive up off a support. And then as you get this closure, this is now range two, and this is range three. You could trade all of range three straight up, right? Even though you'll have levels in your way on the higher time frame. If this happens, you've held support. If you were going to come down, this candle would have came down. It would have closed below, and then you would have respected it, came down. But it didn't. It respected the low here, which highly likely, if this was two 15-minute candles, that means your 30 would have closed above the range with a top wick, right? If these, if this candle one and two, here, this bullish, this bearish candle are two 15-minute candles, this is what the 30 looks like. If that's what the 30 looks like, closure above this area on a 5, 15, 30, as long as you're now getting that closure above that area, that's what it's likelier to do. It's a pretty good chart. It's drawn really nice. What time frame is it? It doesn't even matter. The concept matters.
It's a 15, I think.
Yeah, but if that's the 15, then that's what those two would have been. Those would have been a 30-minute candle, right? You have to understand really how candles form here, right? Right. The very fact that the hourly has four candles in it typically will mean that this is how the hourly formed. One, two, three, right? If it has four 15-minute candles, right? This is what the hourly, if this is the four 15-minute candles, then your hourly here looks like this, right? This is your hourly candle. This is now, right? Once this closes, that's a support. This is your range. This is a clean range. This candle here, this is a clean. Anyway, this area right here is a clean range. That's why we say wick fills because that's why we say wicks are ranges because this is clean. That pullback to support is now establishing a smaller time frame range. And when you see the next hourly pull up, right after a bottom wick, it's typically doing this on the small time frame, the 15s. Remember I said if we close with bearish momentum, you'll probably open with bearish momentum. So the next hourly probably opens with a bearish 15. You get a hold, and if you can see, typically this is what's happening, right? This is now you're getting the hourly flip, right? And you're getting the next candle, that's the hourly drive. This is your 1 hour wick fill now. These four candles here are your 1 hour wick fill. So if this was the hourly, right here, this big candle, then this is what the next candle now looks like. It looks like a bottom wick from here all the way to here. And this is the body of the candle, right? Bottom wick here, up to the flip. So what happens? Remember we just said, when you hold range 2 and you drive back to range 1, it is highly likely, the likelihood of you filling that range up is 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 very high, 95%, 98%, very high. So let's break this down into ranges. Range 1, that wick is a range, right? So range 1, range 2. We've, right, range 1, range 2. We've attempted, now we broke down range 1, right? We need to get rid of this big candle here because that's just what it looked like on the hourly. Right, let's just pretend it's continuing here. So range 1, range 2, right here. Range 2, it's range 1. You've attempted, what happened here? Just like we drew earlier, you've attempted to break down here and have a range 2 breakout over here in this area. You failed, but you've tapped range 2 support, right? The other way. We were talking about range 2 resistance here to come back the other way. You've tapped range 2 support. And if you've tapped range 2 support and from that support you drive up back into range 1, right? This is all happening on the small time frame. On the higher time frame, all you're seeing on the hourly is just a wick fill. But if you understand the concept behind that wick fill, that this is a failed range 2 breakout, that this is on the small time closing back into range 1, right? You're highly likely to fill this area. That's why as the new hourly opens, right? A lot of times in New York, you have a lot of volume. This can play out in a lot faster than 4 15-minute candles, right? It can play out in 3 5-minute candles on a 15-minute. But the point is, you understand what's happening. Once you get that closure above here on the hourly, you're saying, all right, we close bullish above the range. Next candle will need to make a bottom wick. So now you can map out, all right, so then it'll have to fail a range 2 breakout on the smaller time frame. And then it'll have to come up here. So you're banking on the fact that the higher time frame closed bullish above the range, smaller time frame respected this area. And now as you start pulling back, you're banking on the fact that range 2 is going to hold because the higher time frames tell the actual story, are likely to tell the story. Um, and you're taking buys as you're printing range 2 on the smaller time frame. But you need to understand the concept. Why it works is because once we come back from range 2 to range 1, the likelihood of this filling is very high. The likelihood of this rejection at range 2 support is very high if the higher time frame closed above here. If it let's say if the higher time frame closes, this pulled back more, and but this was the level, right? But this was the level. Then you're saying the hourly closed below. You can't really look for that bottom wick because chances are this might happen. But as long as you hold this area, as long as you then print back above range here, chances of you filling that range are very, very high. You could be taking these positions with confidence. If they set up on the 5 and you're looking, that's what's happening on the hourly. You're probably still making a bottom wick in these areas on the hourly. Um, but ideally, you want to be able to close above on the higher time frame and take entries on a smaller time frame below the range. Any que-
On that. Oh, you just erased it. I was gonna say on this here, if this green candle created a bottom wick but still closed above, does that change the analysis at all or no?
What do you mean? Where? Where?
This green candle here, this candle. Because remember, we're coming. This is range one, range two here. This green candle here.
Are you drawing on my screen?
Yeah, this is me. I'm just pointing at it right here. I don't know if you can see it. This green
No,
candle.
I can't see it till you draw.
Oh, okay. This green candle right here. If this green candle created a bottom wick, the one that has a top wick,
Yeah, this green candle right here.
correct,
If it created a bottom wick here,
correct, but it still closed back into range two. It just wicked down below it, but closed above. Does that make a difference?
that makes my case for a drive up stronger.
Okay.
It broke the lows and still couldn't close there, still closed back in range, and now it also it makes my case stronger logically. And if you just look at orders, we've now grabbed more orders. We've grabbed orders here, and we only got this far. We've now grabbed orders down here, even more orders. I'd expect that drive to be further than this area because this area we got here just with these orders, but we've grabbed even more and now we're heading up there. I'd expect that to break now. That makes her case even stronger. You broke that low and if you broke that low and didn't close back up in here, right, and eventually you just close back in range two, you can say, all right, it's decision making time for the market. If you if you created a steep bottom wick here, but closed back up in range, didn't get your range two breakouts, you're waiting for the market to make a decision, but you would rather be in a sell because you've broken all those lows. You've took out whatever orders were sitting here to take you up. That got exhausted. So if you don't get that closure, if you top out right here, right, and you start coming back the other way, yeah, well, as soon as you start breaking support here, you're looking for that entry. You would probably typically when this happens, this candle doesn't just close, it'll push. When you get ranges like that, it'll push, and once it pulls back, your entry, right? Once it pushes, is doing this, your entry, as soon as it comes back up here to these previous wicks, your entries for sells. But you have to build upon what's happening, right? Range one, range two. Did it play out? Are we back in range two? So it's going to be a workflow of things, right? First, you're looking for bias. If you have structure in the day and you're continuing with it, great. You don't have to worry about going back to range two. If you're pulling back and starting to create a range two or a range two breakout, all right, your bias is changing. You're looking for now closures. Once you have your bias, you need closures outside those ranges because that's gonna indicate volume. All right, now you have your bias, so you know where it's going, and you have volume. You know what's going, right? You know that we know that this gold here is gonna go in this direction. We need timing, right? We need an entry, so we have to time this right now. If Our job at that point, once we figured out direction, once we have an indication of volume and closures, is to make sure we have enough range to take advantage of and worry about timing. Timing means just when is it going to go? When? It means off what level? What level is it going to tap to go, right? Because that once it taps that level, that's when it's going to go. So we need timing and we need to make sure that we have enough of an advantage point that everything that we just did pays us enough, and it wasn't just to put us at unnecessary risk. So if we have the range, we have advantage points to take advantage of. We got to figure out the timing and what levels, what advantage points do we have in terms of entries. So you're gonna have to build up on these closures. We're with structure, great. Range two breakout. Let's make sure it actually closes range two breakout. You get a closure for range two breakout, you're looking for buys. If those buys, that bottom wick closes back in range, you're gonna have to wait now because back in range two is arbitrary. But if it closes back down into range one, again, you're locking in for sells to fill all of range one. But if it rejects at range two again, it comes back up, you probably don't even need to wait for a closure. You're just looking for the break of those candles, right? First, you're looking to continue down with structure. Then you're looking, oh, no structure, range one, range two. You're looking for this breakout. Breakout happens, great. You drive up. Breakout doesn't happen, you respect range two. Anything back in here, great. You're looking for a closure and then finish out the range. Anything back down here, you don't even need a closure. You're just looking for a drive down. And then as the market starts pulling back here, you're looking to enter off the previous range wicks or price lowest point where that range came down to. None of this, none of this happens without volume, without structure, which is why you need to identify direction and you need to make sure you have volume, aka closures outside the ranges.